So what will September bring? Mike Santoli starts us off tonight from the New York Stock Exchange.
The month of August has lived up to its reputation for volatility, and now comes September, which has similarly tended to be a challenging month for stocks. Over the past 90 years, September has been the weakest month for stock market returns, with the S&P 500 down slightly more than half of all years, and the average return from all years a negative 1%. This certainly implies the seasonal forces present a headwind for a market that has pulled back from its late July peak. But it's important to recognize historical calendar patterns are rarely a decisive factor for market performance. More central for investors are a familiar set of issues: relentless downward pressure on bond yields, growing questions about whether the trade war is snuffing out global growth, and a stock market that has retained most of its gains for the year, despite corporate profits riding near the flat line. Set against the cloudy growth and trade outlook, though, bulls will note that equity valuations have now dipped below their 5-year average based on forecast earnings, and historic lows on bond yields make stocks look relatively inexpensive, all else being equal. And investor sentiment has turned quite cautious based on investor surveys, flows out of stock funds, and intense demand for downside protection in recent weeks. Wall Street is getting itself clenched up against growth threats, and confidence has waned in central banks' ability to help. So can the Federal Reserve do anything to ease investor fears and support the expansion with its expected rate cut in a few weeks? Well, that is one of the many urgent questions that lie ahead in September. For Nightly Business Report, I'm Mike Santoli at the New York Stock Exchange.